Hello, everyone. My name is Patrick Ian Perez, and I'm very excited to bring you another edition of the Gray Sheet podcast. Today, I'm joined by Patrick Yip, Director of Business Development at APMEX. And we're here to just talk about some of the chaos that's been going on in the banking industry and how that's been affecting precious metals. Of course, APMEX is one of the, if not the largest seller of precious metals in the United States. And so we're very privileged to have Patrick with us here.
Thanks for having me on.
Absolutely. So a couple of weeks ago, we had this kind of chaotic situation with a kind of a bank that no one had really heard of, SVB, Silicon Valley Bank, and there was a run on their deposits because they were holding treasuries to maturity and lost a ton of money on them, even though they were supposed to be safe. So in the aftermath of that, what did you see as far as price action for precious metals with regards to spot prices?
Yeah, so investors typically run to precious metals in times of crises and uncertainty. So going back to Friday, March 10th, gold actually closed the week at 1867 and silver closed the week at 2052. Obviously, that you had the SVB banking crisis over the weekend, but immediately on Sunday evening, when both gold and silver started trading, they spiked upwards. And actually last week, if you look at it, gold closed the week at 1987 for a 6.4% weekly gain, and then silver closed the week at 2257 for a 9.9% weekly gain. And a lot of times when you see rallies in precious metals, obviously those are massive gains for both gold and silver. A lot of times I often get asked like, hey, are precious metals too high? Are we at a top? But I think one of the things that investors need to consider is with the recent banking failures, it's possible, not saying it's going to occur, but it's possible that we could have another widespread banking crisis like in 2008, where it started slow and it took 2 years for this banking crisis to get resolved. And if that does happen, that's tremendously bullish on the precious metals. Just looking at 2008 to 2010, you had over 300 banks fail. And then gold went up from about $700 as in the low of 2008, all the way up to $1,900 in 2011. So a 3-year period where it just basically rallied as a result of a lot of these banking crises.
Right. Yeah, absolutely. And anytime you get close to a double-digit move percentage-wise in a week is just wild. I mean, it's really catches people's attention. So in your position at APMEX, what have you been seeing as far as demand for physical precious metal products?
Yeah, so I think there's demand across the industry. A lot of investors are realizing they don't want counterparty risk. So let's first talk about APMEX. So as you mentioned, APMEX is one of the largest, if not the largest, precious metals dealer in the US. A lot of the times, the trends that we see at APMEX are indicative of the broader retail precious metals trends. So we've been in business for north of 20 years, and the weekend of 3/11 and 3/12 was actually our second best weekend in our company's year history. And we had our third best sales day on Monday, 3/13. In fact, just looking at that period of that week, we sold north of $100 million in precious metals to retail customers just in the first couple of days of that banking crisis week. I think it's also important to take a look at one of APMEX's subsidiaries, One Gold too. One Gold, for those of you who don't know, is a platform that allows users to buy, sell, and trade vaulted positions of precious metals stored at various vaults around the world. So this is the US, Canada, Switzerland, and in the UK. So demand on One Gold actually more than doubled its typical sales day. So you saw physical demand on APMEX increase. You saw One Gold demand more than double. And then lastly, I would say, let's look at the big players. Let's look at central banks. So 2022 was actually their 13th consecutive year of purchasing gold. In addition, 2022 marked a 55-year high in the amount of gold purchased by central banks in a single year. And keep in mind, these are the people setting financial policies across the world. And honestly, if their buying of gold doesn't get you to buy gold, I honestly don't know what will.
No, absolutely. Absolutely. And that's a very closely watched metric, central bank buying. Obviously that must have been a very exciting couple of days at APMEX with with all those orders. But just real quick before we jump to the next question with the One Gold. So correct me if I'm wrong. Is that something where it's like fractional ownership, where you can buy any piece of an ounce of gold or any amount of gold or silver that you want?
Yeah, so I'll give you a little introduction of it. So back in 2018, APMEX partnered with Sprott Asset Management, and Sprott is basically a large alternative asset manager out of Canada with about 22 billion in assets under management. But we wanted to come up with a modern way to purchase gold, and you had a lot of these platforms such as Robinhood, Coinbase. They make it easy to own assets. So we said, hey, let's do the same thing with gold. So with One Gold, you could buy, sell, and trade vaulted positions of metal. We sell gold, silver, and platinum, and you could choose your vault. So you could store it in the US, store it in Canada, Switzerland, or the UK. We start by having various agreements with minting with depositories across the world. So these are Brinks, Loomis, Royal Canadian Mint. We then source wholesale bars, 1,000-ounce silver bars, 400-ounce gold bars, and we make the metal available for customers to buy. So you can basically buy gold or silver in 0.001-ounce increments. Gold is sold for as low as 40 basis points over spot. Silver is sold for as low as 1% over spot. And the nice thing about it too is let's say you said, okay, I like this, but hey, I want physical now. I want it in my hand. We actually offer a redemption option where you could swap your positions at One Gold for any of the 25,000 products available at APMEX, and we'll ship it to you same or next day.
Awesome. That was my next question is, does a person on One Gold have an option to take physical delivery? And so you just answered that. So that's really cool. And when I was first learning this business, I loved reading Eric Sprott's precious metals reports. Like he's one of the original guys, about silver and gold, and he's really, I love that company. It's a great company to partner with. So that's cool to hear.
Yeah, they've been great.
So yesterday afternoon or midday, we got the news about Credit Suisse, which was a bank that was already in trouble. It's been in trouble for a long time, but it's officially, insolvent. And so it created this, like you say, an additional issue for people to think about globally when it comes to the banking system. And in many cases, the most secure holders, that's the big debate right now, that for Credit Suisse, the equity holders are being made whole or getting some payout, where the bond holders, which is in theory safer, are getting completely wiped out. And so we have this crisis of confidence. How can owning precious metals for the average consumer kind of mitigate this risk or hedge it in some way?
Yeah, I think the scary thing about banks is they don't have money to cover all withdrawals if they happen simultaneously. Because so let's say, for example, you deposited $1,000 into the bank. Depending on the bank's reserve requirement, they may lend the majority of your $1,000 to consumers or businesses to earn a profit, or they may spend the majority of your $1,000 to purchase other assets to make a return. So if a bank has that 10% reserve requirement, this means they could lend up to $900 of your $1,000 out, which is, to me, it's kind of scary.
Right.
But the thought is, with a reserve requirement, is not everyone is going to go to the bank at the same time and trying to withdraw all their money. And if they do happen to do that, you'll have an SVB like situation where the bank's going to have to do a fire sale of their assets to cover the withdrawals. And at the end, there may not be enough money to cover all deposits. But getting back to precious metals, I think the nice thing about them is they have no counterparty risk. They're tangible. They're in your hand. They're off the grid. They're not leveraged like many banking assets, and no one could hack it away from you. I know sometimes people say gold or Bitcoin, and I say, well, gold, you can't hack it. If I have something in my hand, you can't hack it.
Yes.
And then it's easily passed from generation to generation. So I'm a strong believer that everyone should own some precious metals.
Yeah, and it's remarkable. Some of the figures are staggering. I mean, with the SVB, it was $42 billion withdrew in 2 days, and Credit Suisse over the past, I think the last quarter, $111 billion were withdrawn by their private, banking customers, which is just crazy if you think about those amount of money and that what they have to do to cover that amount. And then with crypto, I was just reading before we started this that a very like an obscure platform that no one would ever hear of, someone hacked $197 million worth of various cryptos just instantly. And it just completely, and the whole platform had a net worth of 230 million. So it's just gone. So like you say, that cannot happen with precious metals unless someone literally takes it from you.
Yeah, exactly.
So I've always been fascinated by this question. How much of a spike in demand, let's just say in the United States or even globally, in physical products from consumers, would it take for precious metal products to essentially be unavailable, to be just completely sold out?
Yeah, so the value of all gold in existence, I believe, is about 13 trillion US dollars, and I think the value of all silver in existence is about 1.3, 1.4 trillion. As prices increase, who knows? Maybe you have some people start selling supply into the market. I don't think you'll ever have a time where precious metals become unavailable. I think it's just a matter of the price. It's like, how much will you need to pay for an ounce of gold, an ounce of silver? It may not be anywhere close to where we are today. You may need to pay a crazy amount more, but I think it'll all be available, just depending on the price. In terms of retail investors, when you're buying, I would recommend taking a look at a product's bid-ask spread before you decide to buy. And this is basically your cost to own the product if you bought it and sold it immediately at the same price. And I think it's important to note when buying physical precious metals, you typically pay a premium over the gold or silver market price. And this covers the manufacturing and the distribution of the product. And then on the other side, when you go to sell the product, the price you're going to get is based on a variety of factors, including the metal content of your product, the availability of your product in the marketplace, and the desirability of your product. Like I said, I would recommend everyone do their own due diligence to basically minimize that bid-ask spread. You may want to call a dealer such as APMEX, ask about some of their current bid-ask spreads on some of their popular products. For me personally, if I'm buying gold, I'm looking at 1 ounce gold maple leafs and 100-ounce silver bars. And I'm also using One Gold because it has some of the lowest premiums on the market. But like I said, everyone do your own due diligence, find out what's best for you.
And that's a great point, because neophyte buyers or investors often get confused that the same amount of metal can have such various premiums. If you look at all the sovereign 1 ounce gold coins, some of them have very different premiums based on their demand or their scarcity or whatever it is. Are the bid ask spreads something that's available on the APMEX website?
Yeah, I mean, you could show the bid the price on the ask price and what we sell it for. It's usually ask plus a premium, and then the bid is basically the we have a bid price too, and it's bid minus a certain premium, and it varies based on every coin, every product too. I thought you brought up a good point too, and even a couple, let's say a year ago, or even a couple months ago, I mean, you looked at silver eagles, which I think the premiums were just insane on those. You had silver at, let's say, like $22. You had a silver eagle at $15 premium, so crazy premium. You were paying $37 all in for this coin. And then you look at it, well, premiums typically will go down over time. And let's say that premium, that $15 premium normalized, and that, let's say, it's $5. And then gold went up to, let's say, $30. You were right, it went from $22 to $30, but your premium went down. You would actually lose money. So like, you want to basically keep in mind that bid-ask spread. What is it going to cost you to own this product? Don't just buy any product saying, hey, it's silver, it's going to go up. Well, depends on what you get it in at.
Right. Yeah, absolutely. Absolutely. And then what would you say to a new investor who's kind of looking at their money in a bank or excess cash or excess savings, who are kind of on the fence about buying precious metals, beyond what you already said about looking at the bid and ask? If you're looking at a long-term holding, what would you how would you encourage that person to kind of make the jump into PMs?
Yeah, I think everything's cyclical. Nothing goes up forever. Nothing goes down forever. And just going back to, like, let's say 2000, for example, from 2000 to 2010, you had what they called like the stock market lost decade, where stocks didn't return anything. And then precious metals, you looked at it, they went from like $200 or $300 all the way up to $1,900 in 2011. So you had a period in time where precious metals were doing well, stocks not so much. And then fast forward from, let's say, 2011-ish to 2022, you had precious metals kind of not do much. They kind of went up, they went down, they weren't super exciting. Right. And then the stock market now went up, made a fourfold move from 1,250 up to 4,800. I think given everything with inflation here, with this banking crisis, I honestly think the US is overdue for a recession. We went 14 years without a recession. And if we do have a recession, which a lot of economists are predicting, I think this cycle is going to reverse, where maybe you have a period where stocks are not going to do so well and precious metals are going to do well in the next couple of years. So I would say just look at cycles. Just keep in mind what's going on in the economy. And I would say the next couple of years, especially with inflation and this banking crisis, it's going to be different than the past couple of years that we saw.
Yeah, absolutely. Yeah, absolutely. And obviously, you want to get in on the front end of a cycle is really the key when you're buying something that's hopefully about to take off. Awesome. So that's all for me. Is there anything else that you'd like to add? Thank you for your answers. Very thorough and informative, for sure.
Yeah, I would say everyone should definitely recommend checking out precious metals. Your allocation, as we mentioned, is really up to you. I would say it shouldn't be 100%, nor should you go crazy. It shouldn't be 100% either. I know there's some doom and gloomers who say, hey, you need to put all your assets in. It's the only way you're going to be protected. I don't advocate that, but it's somewhere between there, and it's really up to you. I think with inflation here, the instability in the banking world, precious metals are likely going to perform well in the next couple of years. If you want the physical products, definitely check out APMEX.com. As we mentioned, it's tangible, can't be hacked. It's you have all the benefits of precious metals there. Or if you're open to a vaulted solution, or if you want to get involved in the simplest way to own precious metals, check out onegold.com, where premiums are dirt cheap, and you can get started in a couple minutes. But yeah, that's basically all I have.
And just one last question, kind of from a consumer side. When ordering precious metals, is there ever any issues with like the delivery or the shipping, as far as security and stuff like that you guys have to deal with at APMEX?
Yeah, so everything we ship out is in a discrete package. It doesn't say APMEX, it doesn't say gold. It just looks like a normal cardboard box. It is all insured by Lloyd's of London and our private insurance company. So in case you order a couple ounces of gold and you said, hey, for whatever reason, it didn't get delivered, it got lost in the mail, you're covered. You don't need to worry about losing anything or any risk too. We do also have signature confirmation on higher dollar orders, but basically if you order off of APMEX, we're going to ship it secure, discreet, nice sturdy packaging, and it's insured, so you'll be covered.
Fantastic, fantastic. Well, Patrick, thank you very much for joining me this morning. Viewers, thank you for watching. Please always remember to subscribe, like, and check out our past podcast videos. And we hope to be with you again very soon with another great interview. Thanks for watching.